course, let's take it across to the L&T management and talk about what's happening with their hydrocarbon segments in the Middle East region. Mr. Subramanian Sarma, the whole-time director and president at L&T, is joining us on the show right now. Hi, sir. Good to be speaking with you. Thanks so much for making time. Talk to us about how things are looking up, because we were just talking with the management of KAC, and he pointed out how the power transmission orders and the other EPC orders seem to be picking up in that region. Is that something that you are witnessing as well? Increased expenditure when it comes to public infrastructure as well as the entire energy space in the Middle East?
Yeah, thank you. Good morning to all. Yeah, I think very consistent with what the KAC management has said. We are also seeing a good level of activities in the entire region. It, of course, varies from country to country. I mean, we can't say that all the countries have same level of activities, but definitely, I think Kingdom of Saudi Arabia, United Arab Emirates, and Qatar are having many more prospects, and then closely followed by Kuwait and then subsequently Oman. So I think all in all, we are seeing a level of good level of activities, and yeah, the prospect opportunities and pipeline remain quite strong at this point in time.
Yes, absolutely. Good morning, Mr. Sarma. This is Cheryl also joining in the conversation. And things have been looking pretty good for L&T, especially in the hydrocarbons segment as well, because you won a significant orders in the segment last year. If you could help us understand how's the execution progressing in that particular segment of these orders. Also, are you on track for margin and the pipeline expectations for these orders?
Yeah, I mean, it's been almost a year, little over than a year. I think we got the orders mostly in the second quarter of last year. And so little over a year, and so far so good. Jobs have been moving well. We are slightly ahead of our plan. The engineering is substantially complete, and also the procurement, and we are into the manufacturing. The construction work at all the sites have started well. And so at this point in time, again, I think it's looking good. We are on track, and we are on track with respect to all the parameters.
Okay, so that's the take coming in. But could you talk to us about the nature of the investments and the kind of orders that you're looking at backing? Is it getting a bit more competitive, or how's the entire scenario in terms of the pipeline and the competitive intensity in the region?
Well, I think that I have said this before. I mean, there are two or three themes running concurrently. One is, of course, the development of conventional fossil fuel, both oil and gas in the region. And then in addition to that, all the countries are also looking at how to expand their green footprint or reduce the carbon footprint, in other words. And therefore, there are prospects with respect to blue ammonia, green ammonia, and also a lot of renewable projects, gas to power projects. So that's the second theme. And third is that they're also looking at how to monetize and create more value through installing petrochemical facilities. So all these three themes open up a good amount of opportunities for us, because we are present in all of those. And the prospect at this point in time is about $10 to $12 billion of prospects we are working on, and we'll have to see how this unfolds in the next few quarters.
Sarma, one cannot take your eyes out of what exactly is happening in the West Asia, the Middle East region, particularly on the geopolitical uncertainties. How do you assess the risks related to project execution, supply chain continuity? Any risks that you've actually witnessed on back of that, or is it business as usual for you all?
It's a good point. I mean, I wouldn't say business as usual entirely, but substantially, yes. I mean, there have not been any major issues with respect to execution, except for logistics, because logistics did get impacted because of the Red Sea issues. And though the situation is much calmer now, but there are, risk perception of the logistics service provider is still high. So they kind of take a longer route. And so there were some delays in terms of getting our material, which is primarily coming from Europe. The one which is coming from Asia or Asia Pac is not that much affected, but the one which is coming from US or Europe has to take a longer route. So other than that, on the ground, we do not see any significant impact of the geopolitics, much calmer. And hopefully, I think next year we'll see some peace deals being made and the situation becoming calmer.
Yeah, that's what we're all hoping for. A calmer situation, all of us can do with some of that. But talk to me about some of these execution issues. At one point of time, I remember having this conversation with one of your peers that labor issues are cropping up quite a bit. There is that problem of inflation around the labor costs as well. Have things eased out, and is execution still a challenge, or is it more of the same?
No, labor issue has been a problem for quite some time. So it's not something new. I mean, we face that in domestic as well as the international market. Post-COVID, the labor situation has definitely got much more tighter, and to attract skilled workforce into our industry has been an issue for all of us. But nothing significant, no significant change now. I mean, if at all, it has got only better. Um, Having said that, I would say that the situation in Bangladesh did little bit impact in terms of we could not access the resources from that country for some time, but that is also getting normalized now.
Right. If you talk about West Asia, Middle East, it actually contributes approximately 34% of your total order book. But what's the competition landscape like in that entire region, especially for the hydrocarbon business? What's it looking? What's the competition scenario looking like, and how well placed is L&T there?
Well, I think through strong performance, we have built a good brand for ourselves and good reputation. So the good news is at least that we are invited on all the bids, which opens up our funnel, which is very important. And then, of course, we see competition. I mean, I think customers won't like to have competition because that is how they can keep their cost in control. But the most of the competitors are coming from Europe and Korea. So there is kind of, I would say, peer competition, reasonableness, and there is a rational bidding. So that doesn't hurt us. I mean, we always love to have competition because that's what keeps us always on our toes.
And that's but it does look like with that entire kind of green opportunity that you talked about, the other fallout of that is that some of the hydrocarbon spends are actually getting deferred. We did see that big kind of Aramco order getting deferred in Saudi Arabia, and a few others else have happened as well. What's your take in the sense that whatever order depletion is happening in the traditional hydrocarbon segment or deferrals which are happening, would they be offset by the newer kind of ones coming up in hydrogen and ammonia, or do you think in between there could be a scenario of lower order inflows purely because the entire industry is going through this paradigm shift?
I don't think it is like one against the other because all of them will coexist, and there is you have to understand in the oil and gas exploration, there is a good amount of capital required perpetually because the reservoirs get depleted, and to maintain the current production itself requires huge amount of capital. So that will continue. And then, of course, the newer projects, newer developments, could be some kind of capital allocation between green and fossil. But at this point in time, there is a huge focus only on building the fossil. There is very less on the green ammonia, blue ammonia relatively. But the country as a whole, I mean, which is like not necessarily Saudi Aramco, but other investors and the government is also establishing a lot of infrastructure related to renewable energy, solar, wind, and also gas to power. So as long as I think oil prices remain in the current range or even little higher, lower, such capital expenditure, in my view, will continue. I mean, now we don't know what will be the impact of President-elect Trump taking over his office in January and whether there will be any softening in oil prices in the short term. Maybe there will be some volatility. We'll have to wait and see. But I think medium term, long term, all these policies will continue because that's what all these countries need. I mean, they need that for employment, they need for local development, and they need also need that for generating alternative revenue stream other than the oil stream.
Let me ask you about your Carbonlite solutions segment. How is the business looking there, especially when you talk of the order pipeline or for the matter of fact, the margin growth prospect? What should one look out for in the segment?
Yeah, Carbonlite had a good breakthrough, as you would have seen it. We declared and we announced We had two large contracts awarded to us. I mean, of course, it's under limited notice to proceed, but that should get opened up by end of December. And these are very significant awards for that business. And I think we will have a better margin than before because we had made a very measured and informed decision in terms of bidding there. And there are more prospects, so much more so in domestic market. And we are also looking at gas to power opportunities in Middle East. We think we have a bit of a preferred status there with one of the main developers with whom we have been working. So maybe something will unfold. So all in all, I think that business is looking now much more buoyant, and I think it has, at least for next 2-3 years, we see a good momentum.
All right, then we leave it there. Thank you so much, Mr. Sarma, for joining us on ET Now to talk about how the business prospects is actually looking for L&T, especially in the Middle East in the hydrocarbon business, also shedding the light on the exact scenario that is actually unveiling or unfolding in the West Asia region. If you look at L&T, the stock is at the day's highest point at this point in time, trading higher by about 1.2%. But let's put...
If you like this video, then like, share and subscribe to ET Now.